Hello everyone, welcome to another video. It's been a long ass time. All right, so in this video, we're gonna take a step back from time-based concepts of mine, and we're actually gonna be looking at market structure. Now, why am I thinking about market structure all of a sudden? Well, if you guys know, if you are in my Telegram channel, and if you are, or if you have been a subscriber of mine for a long time on YouTube, you will know about my idea of range valuation and true market structure. So this is something I introduced to YouTube and to the trading community almost 2 or 3 years ago now. Okay, I think two years ago. And if you were to, be a hater and come to the comment section and be like, no, 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 this guy did it first. I have receipts. All right. I just don't want to destroy you with receipts. Okay. So what I'm going to do is I just thought, you know what, why not make a video? Because the last video I made about this was 2 years ago. Okay. So let's talk about it. Right. So stay tuned till the end of the video to find out exactly how to use market structure the TTA way. Okay. Now, when we talk about market valuation, right? And when we talk about ICT and when we talk about smart money versus the way that we value ranges, right? We understand that smart money, right? All these guys on Twitter, okay, they value their ranges like this. So when this happens, as price keeps on moving, your premium and discount also keeps on moving. That is horrible. That you sometimes you don't even get trades using this. Okay. So what do? Well, we take the manipulated range there. That's mine. I created it. Or rather, I discovered it first. I put it out first. Okay. No one can claim it. I'm sure other people have marketed it better than me, but you can't take away this very fact that I made it. I created it. I created its usage. Okay. This is true range valuation. This is your true premium and discount, right? And price will more often than not tap the 50. Okay, that's your draw when you're looking for an entry. Sometimes 25, sometimes 75. Well, this can be a zone of interest in terms of market structure. Okay, how do we look at this? Well, you want to see price close above this high. Why close? Because when you have a wick, okay, when you have a wick indicates a quick reaction from that high, in this case, a quick reaction. A quick reaction means, okay, there was liquidity is absorbed. Will price go up or will price go down, right? So that price point in which there's a wick tells you that price is pretty weak over there. So you don't want to really touch that structure. Whereas if you have a body close, then it's telling you that, okay, you know what? No one was willing to sell over here. No one got liquidated over here. So that is a proper market structural break. Okay? Market structural break. This is how you view structure. This is how you should be viewing structure. Okay? Now, think about ICT. Think about how all these other guys are doing, right? Think about this. Now, over here, you're waiting for price to come and hit the 50, right? But sometimes it goes down. Sometimes it doesn't even go there. Then you have to adjust your premium and discount valuation. How subjective is that? While over here, once price breaks structure, you have this objective way of viewing structure. Price must come there. If it doesn't come there, okay, then what are you going to do? If price does not come back into the manipulated range, right? Instead, if price does something like this and continues breaking to the upside, well, you focus on this. Why? Because price is trying to go into another equilibrium point. It's going to another bearish zone, going to another bearish market structure for it to come back down here. And you can view this as inducement or something else. One of the only ICT concepts that I will ever follow is SMT divergence. When you have SMT over here, followed by the break of structure telling you that, okay, you know what, price will not come here for a while. Okay, price will not come there for a while. So focus on what's happening over here. Okay, focus on what's happening over there. That is why viewing structure this way is the best possible way to do it. You can find trades at any time. You don't have to focus on the time of day, although the time of day indicates or signifies large expansive movements. That's what you want, right? Large expansive movements. So you couple this with the time of day, boom, shakalaka. You got the best possible trade ever for the day. Combine that with the bias predictor, market structure. Oh my goodness gracious me. Okay. So thinking about ICT, this is not ICT, so I can shit on him all I want about market structure. Market structure, the ICT way is not it. It's Larry Williams, short-term high, long-term high, intermediate-term high, all over, plus viewing structure in this objective way where you're only focusing on the manipulative range or the manipulated portion of that structure. Okay, what's this? Today, we took buys over here. Today, I took sells over here and I got a stop loss over here. Although if I kept myself my stop loss over here, I would not have taken losses. But anyways, we had the bias predicted for us today to be bullish for the London session. Okay. Now, if you watch this on the 15-minute chart, again, remember everything is fractal. So on the 15-minute chart, that's your market structural break with the body close. Therefore, you are interested in this high to that low here. Okay, drop down to the 5. And what can you see? You can see that price is moving nicely. And how do you identify a market structural shift, right? How? Well, you have a high. So you have a high that put in a low. You want that high to be traded through with the body close. That is your market structural shift. Apply the same concept, 50% buy. This is something that I shared to the Telegram group today when this was happening. Take profit was up over here. Okay, so right here, if you view this on the 1-minute chart, right? If you view this on the 1-minute chart, can you see this? See how we break up there. This is the swing high that caused this swing low, right? This break over here also swing high that causes swing low because it's relative, right? Yeah, stop hunt. This low led to this high led to this low. So better if you use this high, right? Take this high because it closed above it. Take it down. Count to the 50 buy. No, don't worry about inducement, this inducement, that. If you want to worry about inducements, then check this out. The high risk to reward filter point. This is your stop hunt. Everything above this stop hunted portion is what? Inducement. So that's your inducement. And see price just failed to come over there. I don't care. I'm going to buy it anyway. I'm going to keep my stop loss over here. Okay. Now, when price started to trade higher, that's telling me that, yes, okay, this is actually working. This setup is actually a good setup. It's going to work, right? What am I going to do? Because I know that this high was broken on the 15-minute chart. On the 5-minute chart, it's not a protected high. Yeah, it's a weak high. I mean, it's not a this low is not a weak this low is not a protected low on the 5-minute chart. On a 15-minute chart, it is. So high time frame matters, right? So you've got to have at least one high time frame confirmation that, okay, you know what, this structure is it. This is what we're going to be using. Okay, and then couple that with liquidity, couple that with time. Bro, I'm telling you, the levels of shit. Okay, so we came down, paired up. See how this swing high was connected to this swing low, right? There. So when price breaks above this one and closes above it, that's telling you that, okay, you know what? We want price to come into the 50% buy, boom. Gone, finished. Yep. Check this out now. What do we have right here? So my take profit is down over here. I can actually put it down here, but I just want to get out of this position. So can you see how the London low, which is right here, right? Along with all of these lows, what are they? Stack sell side. Yes, stack sell side. So how am I participating in this sell? Well, I could have, the one that hit stop loss was over here. So I kept my stop right here, got tagged out. So if you look at this, yeah, if you look at this, see how this high is connected to this wick. This wick on the lower time frame is a swing low that led to the high. When you broke it and when you close below, you are taking that wick there. That's your manipulated range. Down we go. So I kept my stop. So once we move low, I kept my stop here and khalas. Okay. Now, when we finish this, when we came over here, I can see how to sell over here, right? Yeah, what's this? It's fractal, guys. It's fractal. Check this out. See now how we made a high, we broke down, right? High and broke down. Now, on this time frame, can you see how this low led to this high? So if I take this low and move it up there, can you see how, it didn't really go to the 50% and prices dropped? Why is that? It is because the 50% on the way down has already been mitigated by this range. Okay, by this range, right? So then you focus on the 25%, right? Then how did I get my entry up over here? Simple, guys. 30-second chart. Look. Actually, not 30-second, 15-second chart. Right? See. Breakdown, swing low. %, enter, stop loss up over there. Down we go. And look at this. The risk to reward is quite high, right? 10 pips stop. And what do we have? 10 pips stop for a potential. I already took partials, so that's fine. For a 150 pip take profit. What's that? 15 hour. Can't do it every time, of course, but when it's there, it's there. Okay, that's one way. When the 50% is mitigated already, go for the 25. Okay, this low made that high. This low, see how price wicked below it, wicked below it, wicked below it, and we're still going lower. That's fine. Okay, that's fine. Because now we're looking at the next structural break because you got your entry. You got your entry. Now, what about this upcoming entry, the entry that you're looking for in order to go short? Yeah, see this. See how we close below this low that made this high. Yeah, the swing low made that high. Okay, we broke down, mitigated the 50, and then we're breaking down again, looking for the 25%, which is around here. But price is reacting even before that. Yeah, even before that. So now it's a matter of fractality. Come to the 15, check for breaks, nothing. 30, check for breaks, nothing. 1 hour, check for breaks, nothing. 3 minute, check for breaks. What do we have? Well, we broke down, mitigated the 25% also, and then we're breaking down. Oh my goodness. So now we have this swing low that made what? This swing high. Take that. What happened? 50%. Yeah, on this 5-minute chart is there. 3-minute chart is suggesting we should not go higher than this. 15-minute chart, nothing apart from this one right here. See? This one, the 50% over here. Right? So the higher time frame makes up the lower time frame. So just because, the lower time frame makes up the higher time frame. So the lower time frame finished the move. Now, whatever other structural breaks are that, because can you see, we have a higher time frame low over here, then made this higher time frame high. So once we break it, and if we are supposed to trade lower, then we'll come back into the 50% or 25%, depending on the mitigations, and then we'll go lower. All right, but the bias for today is bullish. So that's why I need a low to go, and then we can work according to that. So you're not going to be looking at structure as a whole like this. You'll be combining bias, time, liquidity, all of those good stuff, and then only you'll be making a decision on whether you want to buy or whether you want to sell. Okay, so I hope you guys really understood that. Okay, now the next topic is this: how to understand whether a low or a high is protected or not. So if you have a high and a low, and when price breaks and closes above, and if we are bullish, then this low is not going to go. Now, note how I said if we are bullish, right? So that's what I'm saying. Have your bias saying it's bullish, have your structure being broken bullish, have a bullish SMT. My goodness. Beautiful. Likewise, when you have a high and a low, right? Then we break this low with a close. This high is protected. Then come and do that. Okay. That's all there is to it. So if you want to use this as an entry model, right? All you have to do is wait for the time, wait for the range to break, wait for the 50% or the 25%, execute. And as for your targets, I will leave that up to you. Or if you have been studying my Telegram chat, if you have been studying my exits, you will know that untapped liquidity is where it's at. With that said, I hope you found this insightful. Bias predictions are for free, by the way. If you register with my broker and deposit $200 and use the account for trading using the bias predictions. So basically, it's free. I don't know why you won't take it because I'm giving it to you for free. Just register with the broker. You make money, I make money, right? So I don't see the problem with that. And there's one more spot available for the April one-on-one mentorship, where in which you're able to have access to me 24/7, all the content, live sessions, my entry models, every goddamn thing that's there that makes me different from these other people. Get access to it. And most importantly, precision in time and price. So with that said, I'll see you in the next one. Good luck and good trading. Bye-bye.